All right, we are live, and today we have Anton Hartmann here. And I met Anton actually pretty recently through Owners Club, which is a part of Sub 2. And he is today with us to share a little bit more about his story in real estate investing. So thanks so much, Anton, for joining us. I appreciate it.
Hey, Andrea, thank you very much for having me today. Looking forward to the opportunity to talk together with you and those watching. What about kind of things that we're doing in the real estate investing space, and the ways in which we both make money and uh, contribute to the partners and people that we're working with.
Yeah, that's super exciting to have you on. So tell me a little bit more about how you got into real estate, and did you transition from a regular job to real estate, or is this something you've kind of added in on top of what you've been doing?
I mean, the short answer is it's something I've added on to what I've done, but I have a finance background and some real estate background as well. I have a long career in IT and technology that was also uh, mixed in with I have an MBA and some finance background that brings me some of the interests and depths that makes real estate in the creative finance space be something that is especially interesting to me. Uh, but I've actually found creative real estate financing um, through looking at business financing and business acquisition financing in the creative space. I had some previous exposure to real estate through some couple of traditional long-term rentals that I'd been
Mm.
involved with, but real estate specifically was very much a side thing. I started to look at ways in which I could diversify what I was doing, and that led me to looking at business acquisition and creative ways of acquiring businesses through seller financing, uh, working with existing financing that a business owner had in place, and other types of creative strategies. And that, in the course of looking at that, I looked at was exposed to creative financing in real estate with sub two with Pace Morby,
Mm.
and kind of one thing led to another. I found that to be really fascinating, and I absorbed a lot about that, and then joined Sub Two, joined Sub Two Mastermind, then Owners Club, and in the last year and a half, that little bit of year and a half, 2 years has taken that interest to now more than 25 creative transactions.
That's outstanding. And it's really interesting that you came about it from the business acquisition side and the business financing side. Um, I think it's obviously a natural transition, but for me, I didn't even know anything about the business acquisition side and the creative side of businesses until I learned about the creative side of real estate. And so my kind of introduction to this is almost the exact opposite of yours, which is pretty cool that we still both ended up in a similar spot. And there's so much to do here in creative real estate, and so I'd love to hear a little bit more about what specifically you do within the real estate realm. Like, what's kind of your flavor?
The core business that I have is I put homestead buyers, retail buyers, into homes that are not able to qualify for conventional mortgage financing. Someone who uh, may have maybe an independent contractor or a small business owner that doesn't have the paper documented income in the format and structure that a traditional bank is looking for, or someone who, through perhaps no fault of their own, perhaps a divorce or medical debt situation, has a consumer finance profile that doesn't fit the standard mold that,
Mhm.
from our perspective, we're able to, in both of those cases, look deeper than a traditional bank. So we don't have the same box that we need to fit into. Obviously, we still need to work with people to make sure that they can afford what they're buying. It's a lose-lose situation. If they end up in a home that they can't afford,
Mhm.
that's a bad situation for them. So it's not about putting unqualified people or putting people in a tough situation through buying a house or getting on a path to buying a house. It's about uh, getting qualified people that are truly qualified, but that don't qualify in the by the traditional yardstick that a large mortgage lender or bank has to work within.
That's a really cool, way to help people. And it sounds like with your background in finance, it lends itself really well to these types of deals.
Yeah, it does. And what it's all about, ultimately it's all about creativity, in terms of, especially when we look at buyers that want to buy a property that have different types of circumstances. There are people that have a limited monthly income, but have substantial savings,
Mhm.
such that they're able to make a large down payment on a property, but that they need to structure that into a relatively low monthly payment, and that's but then on the other hand, we have customers, like someone I closed a deal with recently in Colorado Springs, Colorado, who um, is in the construction industry, which is very capital, as most people know, very capital intensive, expensive machinery and equipment. So he produces a lot of monthly cash flow, but
Mhm.
doesn't accumulate large amounts of capital because of the you know the types of investments that he needs to be making in his business. So in that situation, brought not all that much money to the table, 3 or 4 or 5% of the purchase price of the property, but has strong monthly cash flow. So they're is able to make that work, make a higher monthly payment work.
Oh, that's really cool concept, and it sounds like it really fits a need that's out there. Now, how are you finding these deals?
Excellent question. The biggest source that I have of properties for sale
Mhm.
are properties that have been secured by a wholesaler that either specializes in creative finance or does creative finance, and referrals. People that have perhaps sold us a property previously, or in one case, we sold someone a new house, and after a short period of time, they were unable to sell the previous property that they had, and ended up purchasing that from them creatively. It's a funny situation where they pay me every month and I pay them every month. So
That's pretty great.
yeah, but that's kind of the miracle, the miracle of just being able to slice things differently. In there's so much power in that. And when we look at a typical transaction, there's a creative seller,
Mhm.
that's typically someone is selling creatively because they're in some sort of pain, or they're in some sort of situation that traditional financing can't uh, can't help them out with. It might be that they've purchased a property recently that has a great interest rate, but hasn't appreciated much over the last 1 or 2 years.
Mhm.
And as a result, if they had to pay the costs associated with a traditional sale, they would have to bring money to the table to complete a closing. Or someone who is in like deeply in arrears and behind on their mortgage, recently purchased a property in Colorado where the family was approximately $42,000 behind on their mortgage due to some family health and other circumstances. Essentially, through no fault of their own, they were very behind on their mortgage. And
Mhm.
the traditional answer to that, and they were about 2 weeks away from having their property auctioned and having a foreclosure on their record for the next 7 years, damaging their credit. Or they could have done potentially a deed in lieu and just handed the property back to the bank, but also had a big dent in their credit. In this situation, we were able to catch up those arrears. We were able to give them some money in their pocket to get established in a new living situation. And instead of walking away with nothing and dinged credit, they had the opportunity to walk forward to the next phase in their life in a much cleaner way. So that's one party in almost every creative transaction that benefits. Obviously, we've talked about the benefits to a buyer that can come through creative financing, but there's also other people that can benefit in uh, in that particular transaction. There was also a wholesaler that made some money. There was an agent that made some money, and there was also a third family that was helped. There there can be a shortage of good secured investment opportunities for smaller time investors. Typically someone who only has 10, 20, 30, $40,000 to invest is has very limited investment options. It might be a mutual fund or their 401k, something like that. Whereas in this circumstance, you're able to bring in a um, private money lender in this circumstance who they made a $40,000 investment, and they're getting a check for they're getting a check each and every month for about $450. And so that's another family that is getting a significant benefit every month, just on top of the two families that we talked about originally. And not to mention obviously the those of us that put the transaction together. So it's a huge win 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 win, uh, which is something I really like about the space that I'm in.
That's such a cool opportunity to help, all of those different parties, because there's so many different people that are a part of that transaction. And it's really cool that you were able to put that together. So I'm sure you evaluate a ton of different opportunities from wholesalers and from agents, and even the opportunity that came from a buyer of one of yours that then became a seller. How do you decide which deals are worth pursuing?
That's an excellent question. And most of the uh, deals that I evaluate are in fact not
Mhm.
deals, especially coming from the wholesaling space. However, there is, there are more deals and more properties that, make sense with this type of exit strategy than others. When I'm evaluating deals, there's really three key pieces to it. Number one is what's the interest? What's the interest rate? Kind of what are the terms on the either underlying loan or seller financing? Number two is what is the entry fee? Meaning, what is it going to cost to acquire the deal? Whether that's paying arrears, paying an agent or a wholesaler, paying something to the seller, and number three is what will the equity position be in the property after closing? If there's an opportunity to get something at a little bit, maybe a little bit below market value, that's a third. So a deal needs to either have one of those be excellent, or all three of them to be good. So I'll take an example of a recent purchase in Colorado Springs, Colorado. It was a approximately $400,000 house. It has a very attractive interest rate on the loan, 2.75%. So it's an excellent rate. But the entry fee on that, with costs, with what was paid to the seller and costs, was about $65,000. So, if you looked at that just in a vacuum, $65,000 entry fee on a $400,000 property doesn't necessarily look very good in the creative space. And then we acquired the property for around $400,000. Probably worth right around that. So there really was no significant equity in the property, but it's still an excellent deal because we're able to acquire a very good interest rate. The property ended up selling for $475,000. And you're probably sitting there and saying, why would someone want to pay, a significant premium over, what the property is, quote unquote, worth? And when we look at that, when we sold the property, we sold that property with an interest rate that was about 2.5% below current market interest rates. So they were able to still get a monthly payment that is less than what they would have had to come to the table for, even for a $400,000 or $420,000 house at current market rates. And on top of that, they were able to make only a $20,000 down payment on that particular property. And small business owner, construction company owner, that couldn't likely have even gotten a market rate loan, but we were able to get him in there at an advantageous interest rate with an advantageous down payment, and a good purchase price, and he's paying less than he would have otherwise, and we're cash flowing quite nicely on that property each and every month. So that's I know the question was kind of back to deal selection, and you're kind of carrying that through, so you can to kind of explain why that was the type of deal that made sense. Then I can go to something that's kind of completely on the opposite end of the spectrum, It was a transaction that didn't close because of an unrelated title problem, but it was in South Carolina, and the mortgage rate was 8.25%. And you just see the look right there on your face tells the story of what someone, a creative transaction. Why on earth would you ever want to buy a a transaction with a rate anything like that? And I'll make it worse. They were in pre-foreclosure with $50,000 in arrears. So I mean, this is sounding like a worse and worse
Yeah.
deal. But on the other side, the property was worth around 525, $550,000, and we were going to be able to be all in even after paying the arrears and taking on the liens. We would have been in the property about 405, $410,000. So we would then have taken that property and we would have sold it for around what it was worth, 525,000 and been able to offer an attractive interest rate on it.
Mhm.
Because even though, say, we were able to sell it at 5.5% on a larger loan amount, uh, we would be able to still be able to pay the higher rate mortgage on the lower amount. So that's looking at a deal that's in almost every way opposite to the first deal that I talked about, but that's still with creativity and creative finance that that can be a deal too.
Mhm.
There are two extremes, and then there's just vanilla, more vanilla deals through the middle that have a middling interest rate, a middling entry fee, and not a lot of equity. That it's ultimately all mathematics to make sure that the combination of those three factors still allows the ability to sell the property at an attractive and an attractive set of terms to an end buyer. Yeah.
That makes a lot of sense. One thing I noticed is you didn't mention that where the property was located was one of your criteria. So I know you've mentioned a couple of properties now in Colorado, and then now just recently one in the Southeast. Where are you located, and how are you kind of making a decision on properties across the country?
I'm located in Georgia, outside of Atlanta. The portfolio of properties that I have is approximately 50% in the state of Colorado, and the other 50% kind of scattered here in the southeast, mid-Atlantic, Louisville, Kansas City, South Carolina, Southern Virginia, Georgia, some of those areas. What I'm looking for in an area is a couple of things. Number one, I need to either be, me or someone on my team or one of my partners needs to be reasonably close to the area, which is I have a excellent partner in Colorado that
Mhm.
is the reason why I do so much business there, and other kind of partners and people that I work with that are in the areas that are closer to uh, me. So from just a straight business perspective, those are the reasons for those areas. But if I'm looking at it more from a what is the anatomy of a property that makes sense, I'm typically looking for something that is no more than 50% above or below the median home price in an area. So if in a city or a community, the median home price is 400,000, I would want to be between 200,000 and 600,000 as as a price. Um, we find that below that, uh, usually we start to run into a lot of complications with the available buyers, in that space. And above, um, it just becomes a thinner market. There's fewer properties in that space, fewer buyers in that space, so those properties can tend to sit around um, for a while. So that's kind of a general pricing criteria. Then, whenever possible, try to have something where a mortgage payment would end up being no more than about $500 more than it would be to rent a similar property. A lot of the buyers, or one significant set of buyers that we have, are people that are currently renting and would like to make the switch over, but they don't necessarily have a huge ability to pay a huge amount more than they were paying for rent.
Mm-hmm.
Obviously, there are markets and places where it's simply just doesn't hold very well, um, in like inexpensive suburbs of Metro Denver. The prices Their prices are just well above what rentals are, and
Mm-hmm.
in that case, we're looking at trying to be in a position where uh, the overall price value that we're able to offer is significantly below what it would cost to buy an equivalent property. And the
Mm-hmm.
reason for that is the type of buyer there is sometimes someone who's buying creatively just because it's a better deal. They could go to the bank, they could get a more a they could potentially get a loan, but it wouldn't be on attractive terms with obviously the current interest rate environment. So that's another set of buyers that can fit in, um, that can fit in. And then even if you can't qualify for a loan, you're buying an expensive property or buying a nice property. You don't want to pay a major. You don't want to pay a you don't want to pay a crazy interest rate. You don't want to do that. And really, that's not the business that we want to be in. I say that we take the buy here, pay here out of seller financing. Yeah, that's unfortunate. There's some players in the seller financing space in real estate that are that way, but obviously, the stereotype that seller financing or buy here, pay here tends to have is that rundown car lot outside of town, or in a less and economically um, benefited area that whose business model is to take advantage of people. In many cases, their business model is to take advantage of people with unfair or unreasonable financing, or pricing that's maybe not competitive to the value of what someone's purchasing, and simply don't want to be in properties that would be would require doing business like that to make those properties work. Said that if if I have to be a jerk to be successful in the business or deals that I'm doing, I'm either buying the wrong deals or in the wrong line of work. And as I'm evaluating and underwriting a deal, I'm looking at, can I exit it without doing that? And if I can't, I don't want to buy it because I don't want to do that.
Yeah, that's a good philosophy. Are there any times besides when maybe some of that used car salesman esque would have to come in, that maybe, the deal checks a lot of the boxes, but for some reason you still don't pull the trigger and kind of move forward with it.
Yeah, absolutely. Relationships with all of the parties involved that we were talking about earlier, whether that's a seller, a buyer, an investor, all of those are working with the right people and having the right relationships, is critical in the creative finance space. So if you look at a traditional, retail real estate transaction or even a traditional wholesale transaction, everyone shows up on closing day, papers are signed, checks are pushed around, and everyone loses each other's phone numbers, and
Mhm.
that's the end. In creative finance, I say that, from a seller perspective, kind of marrying that seller in a certain way, because we're going to be working together potentially for the next 25, 27, 30 years. And
Mhm.
that has to be someone that I feel like is someone I want to be working with for that length of time, that I feel comfortable with them, that I have a reasonable level of trust and rapport with. And about 6 months ago, we started to work on a deal that would have been absolutely, from a financing perspective, incredible. It was a
Mhm.
$600,000 property that be getting at a little bit below, ARV, and had what was going to be a weighted average interest rate of below 3%. But as you started to go through the process, um, there were just a lot of red flags with the relationship with the seller. They were not as cooperative as we would have wanted them to be, especially considering that they were not being very cooperative while we were still in a place where they were going to eminently receive a check from us, and just didn't feel good about the transparency and the, I guess, ethics, ultimately the ethics of the person that we were potentially going to be working with, and just doesn't the numbers can make sense, but if the people involved don't make sense, or you don't feel right about them, it's pass, pass, and move on to the next one. Is That's just, you don't want to be in business. You don't want to be in business with people that you just don't feel good about being in business with.
Absolutely. And real estate is all about relationships, but creative finance is a whole nother level of that. And so I'm glad that you pointed that out, because if any of those relationship pieces aren't in a solid, footing before you get started, you're really building that long-term relationship on super rocky ground, and it's just likely going to bring up issues later on, and they can only get worse. And then those sellers, that they got their check, now that they're kind of checked out, but you need them for help or something. If they're not there anymore, it can be really difficult to ensure that that transaction is successful.
Yeah, absolutely. And it links back again to there being many stakeholders in a creative finance transaction, that me as the person, me and my team and partners being the center of that, that if we don't build and maintain a good relationship with each of the parties involved, it doesn't just have the potential, obviously, to cause problems for us, but a buyer can have some challenges if, um, we don't have a good relationship and we aren't doing a good job, working with the sellers and investors, or really any stakeholding party in there. So, those that there's an extra layer of responsibility in there, and that's also kind of dovetails into a piece of business philosophy that uh, I have, that I always stay in the middle of creative financing transactions. And obviously there's, there are financial, there's, some financial benefits to that. But I think most importantly, the expertise that I bring to the table and my teams bring to the table, of being able to make sure that these transactions continue to be successful for the whole duration of the transaction, of the life of the deal, is, very, very important. If there's a buyer, that's, struggling on, making payments, the we're going to continue to ensure that the seller's mortgage is paid while we work through the transaction. If there's a problem with insurance or something of that nature that might cause a problem with the bank, it's not a seller and a buyer that don't have any knowledge of creative finance, and shouldn't have to have any knowledge of creative finance solving it. I see too many situations, some of which I've had to step in and buy from others, where people are left to their own devices, and the person that was in the middle, got their check at closing and just moved on with life, and there wasn't anyone there to make sure the relationships and pieces continued to work, and buyers and sellers, ended up in a terrible circumstance. It was not a deal that I was involved with, but I saw a transaction that was assigned by a wholesaler to an end buyer.
Mm-hmm.
That end buyer and seller and the original seller didn't connect well, and ultimately the end buyer stopped paying the loan. The seller was uncooperative with helping to get that solved. And ultimately, that property went to foreclosure. The seller lost the property and got the ding of the foreclosure, and the buyer lost the property as well. They lost their entire investment in it, and that simply wouldn't have happened in a transaction where the middle party and the organizer and the knowledgeable people had stayed involved. And transactions like that are the ones that produce the horror stories and produce the things that give others in the non-creative real estate space the way to point and say, creative financing is dangerous. Creative financing isn't dangerous. Financing transactions of any kind done badly are dangerous. Doesn't matter whether it's a creative transaction done badly, or go back to the days of liar loans, where people were able to get mortgages from banks with no documentation, or situations where anyone is not being transparent in real estate or business transactions. That's lack of professionalism and accountability is what makes bad transactions, not the fact that a transaction is creative.
Yeah, absolutely. And that's a really good point. We want to make sure that people that are involved in these transactions are, operating on the up and up. And it sounds like you're doing that really, really well. So that's great to hear. Thinking about that and thinking about, your experiences, can you share a story of, you kind of already shared a couple, but just if there's any other ones that are coming to your mind about a successful deal that you've done and that you've completed, and any learnings that you took from that one?
Yeah, absolutely. We take another recent transaction that was kind of more in the vanilla camp. We had a seller that has a small amount of arrears. It was only 1 or 2 months. It was they were just trying to move on to something else, and it had fallen behind a little bit, but it really could have caught that up and moved on in a different way had they wanted to. But we ended up working a transaction with them, so they didn't have to.
Mm-hmm.
They had that money, could have come out of pocket for it, but didn't have to, because we were able to cover that for them, cover all of the uh, cover all the costs, and at the same time, uh, almost before within a few days of purchasing that property from that seller, we got we had buyer uh, a buyer into there, someone who owns a cleaning company, uh,
Mm-hmm.
and didn't fit the successful business, so it didn't fit the mold. Uh, Again, neither one of these, especially on the seller side, wasn't necessarily an obvious I need a creative solution problem, but but just by talking and being able to articulate benefits, they were still willing to do a creative transaction. And um, I think both what this really teaches is that by talking and understanding what people's situations are, and what would benefit them and what their challenges are, that you don't have to have a dramatic it doesn't have to be a dramatic problem for a transaction to make sense, and for a transaction to come together that's still a win-win-win.
That's awesome. That's really cool. And how about on the flip side? Have you had any transactions that didn't really go as planned? I know you shared the one where you didn't actually go all the way through with it. Any others that didn't go as planned and some learnings from that?
Yeah, thankfully, there's, because of kind of generally good or general good general practices. uh, I don't have any horror stories, thankfully,
I,
but uh, there's obviously deals that don't hit exactly what you would want or when you would want them. So for example, a different transaction in Aurora, Colorado, was an advantageous entry fee, but it wasn't the best rate, and wasn't was a it's a 2 bedroom, 2 bath property. It's a
Mhm.
detached house, but a 2 bedroom and 2 bath property. And the comps, the comps worked, all the pieces worked. In that, from a numbers perspective, the people were right, the relationships were right, but a lesson out of it is that a 2 bedroom property is a challenge can be a challenge to sell, because it's a set of narrow set of buyers. But what we then ended up doing with this property is we did a small renovation to it to add a third bedroom, and we're able to actually get an ensuite to it. So we made a within the footprint of the property, made it a 3 bedroom and 3 bathroom house. Obviously, there was some unplanned investment in there, and some additional holding time. But we looked at the situation, found a different way to slice it, and it's a profit. It's a deal that will be profitable in the end. Is it going to take longer and more payments before it's performing to where we would like it to be? Absolutely.
Mhm.
But um, we took we took our lemons and made lemonade out of it.
I like it. And that's probably a great way to raise the property value too at the same time, even if it wasn't exactly in the plans. And maybe it will take a little bit longer, but at least you're helping with that equity spread that you were talking about looking for.
Yeah,
Um,
absolutely. Yeah.
Evaluating. Yeah. Are you evaluating any deals currently? I'm sure you're probably constantly looking at them all the time. Are there any that you're under contract for, or anything you want to share with us about some of the future deals?
Yeah, I've got some really neat really neat stuff that we're working on right now. Uh, One kind of demonstrates some of the types of complex transactions that we can work on. Traditional, I mean, when people are thinking about creative financing, they're typically thinking about, okay, we're going to take over a mortgage subject to, and pay the bank, and do those sorts of things. And obviously, that's the baseline. That's vanilla creative finance. But there's lots of other types of liens that you can end up with on properties. You could have solar. You could have financed new windows. You could have a credit card lien. Those are all liens that I've seen before. You can have potentially what's known as a partial claim mortgage, so something that was from someone having done a loan modification. There's a silent additional lien that was used to handle arrears. There can be home equity line. This is a property that checks 4 boxes. It has solar on it, so there's a solar loan. It has a home equity line of credit on it. It has obviously a first mortgage, and the property is also in foreclosure, about 45 days away from auction.
Wow.
So a whole bunch of moving pieces that would probably make a lot of investors run screaming. These are the types of deals that I really love, because this is obviously someone with an incredible amount of pain and complexity, but it comes back to math. We're able to take all of the costs that will be associated with this, redeeming a loan, and the 3 liens that we'll take subject to. Take all those values, take all the values of those liens, the interest rates of those liens. We do the math and come together, and the weighted average rate, so the total cost of all of those 3 liens together is about 4.25%, between 4.25% and 4.5%. So while there's obviously the HELOC is expensive, it averages in. Obviously we will have arrears to solve. So this will be an example of a kind of property where we'll bring an investor in to assist with the entry costs, resolving those arrears. And in fact, in this case, there's enough equity on top of the arrears that not only is the seller going to get out of this challenging situation, we're actually going to be able to give the seller some money to walk away from her property and be able to move on, even in this obviously very messy overall situation. But what we'll be doing on this property, it'll be closing here in the next couple of weeks, is bring in an investor on this property. It'll be approximately $50,000 to $60,000 from an investor, and we'll do that on what's a 90. We do it on a 90-day term, but we guarantee that a payout will be in 90 days or less. And on this transaction, that would either be we've sold the property on to someone, we make an investment of our equity from ourselves, our partners, or refinance that into long term. And typically what we would offer on it is a 20% annualized return. which in the short term lending space is a solid return, but the kind of special upside that we do in here is that if it's a 90-day, if the loan is a term of up to 90 days, you're going to get 90 days of interest regardless. It's a fixed return. So for example, on $60,000, you're going to get $63,000 back, whether pay it back in 3 weeks because it sells quickly, or pay it back at 90 days because that's the term of it. So there's big alignment of incentives for, we want to sell the property as quickly as possible because that's what starts our return on it, and it's obviously a big win to an investor to get a 90-day return in 30 days. And we offer, obviously these are they're secured transactions, a promissory note and a deed of trust, and we do also do a personal a personal guarantee. The available equity in many of these, as you would likely imagine, isn't necessarily the highest in terms of, but they are they're secured on the property and then backed by some the additional personal guarantee, and it's very fixed duration, and the payoff isn't tied. The payoff is not necessarily tied to the sale or disposition of the property. Obviously, if it's sold in 45 days, it's tied to that simply because that's obviously caused the payback. Mm-hmm. But if we get to day 90 and the property hasn't sold, the phone call is not going to be, hey, how does going past 90 days sound? It's going to be, here's your payoff from either refinancing it or investing it ourselves. So unlike a lot of say a fix and flip transaction where lending on that is typically fairly closely tied to an exit. Without the property selling, it's the exception rather than the rule that a private money lender can get paid off. So that's part of the the trade-off of the trade-off here is certainty.
That's pretty cool, and a really awesome opportunity for the investors as well as the buyer, the seller, the agents, the wholesaler, yourself. Lots of wins there, especially in that complicated scenario. I don't know that I've heard of that many kind of things going on with a transaction before, so that's pretty cool.
Yeah, I get I've started to build the reputation for. I'm not afraid to sharpen my. You used to be sharpen your pencil. These days, it's fire up Google Sheets and figure out how can we make the weird work, and kind of have the reputation for the ability to think differently. I joke that I do creative.
I like it. I like it a lot. And you're mentioning Google Sheets, and that's making me wonder, are there any systems and processes that have helped you scale your entire operation? Because, with these 25 transactions and obviously plenty more on the way, there's got to be a lot of moving pieces and ongoing things. Do you have a CRM? Do you have some awesome Google Sheets thing? Are you all handwork? How does it work?
There's a lot of, there's a lot of Google Sheets. There's a lot of those types of things, but most importantly, it's working with other professionals that make transactions and servicing go smoothly. For example, all of the all of the transactions once an end buyer is in the property are we utilize a servicing company that I highly recommend named Southern Loan Servicing. They provide an online portal and tracking to both obviously to myself, but also to the person who has purchased the property. They get their monthly statements, their tax reporting, and all of that. So that's an example of working with the right partner, with the right vendor and partner, and then also work every transaction, entry, exit. Work with transaction, excellent, transaction coordinator and partner at Hive Services, Amanda Spinney and team there that bring the, work to help bring the expertise to ensure that every seller is protected appropriately, every investor is protected appropriately, every buyer is protected appropriately, and that paperwork errors and mistakes are one of the biggest things that can cause problems with creative transactions, whether it's drawing unnecessary attention from a bank because insurance changes were handled incorrectly, or all those sorts of noise type things that can cause problems. We've got both within my team and the people that I work with, got the the systems and processes to what are the right steps to get every transaction closed. I have a great person over at Steadily Insurance that make sure that we have the right policies in place on the right dates, and that the right proofs of insurance are to the right with the right mortgagee clauses. There's 1,000 simple details that if you have the right processes, they're simple. If you don't, each and every one of them becomes a potential pitfall that can really trip up a transaction, or trip up the long-term stability. So having all of these systems and processes is a value that we can also bring to other investors. There's a couple we talked about. One way earlier, private money lending, that and an investor can lean into the systems and processes that we have and benefit from working with us. But there's also two other major ways that we work with investors. One is, as I noted, we hold all of our assets long term, whether that's a lease option, where we're holding the deed in a lease, or it's more of a traditional seller finance contract for deed, or something of that nature. We're also holding that on our books, which gives us an opportunity to take a performing transaction and sell a portion of the equity and cash flow in that deal to a long-term investor who's trying to build a portfolio of passive income. They become essentially a limited partner that gets a preferred return that's typically in the mid to upper teens, cash on cash, and that's mailbox money for them. It's fully owned and managed. It's fully managed and operated, on on our side. As an example of one that's in fact currently available. If anyone is if anyone sees this, we have a it's actually connects into a transaction we talked about earlier, where that property in one of the properties in Colorado Springs, where we're looking for an investor to bring between either 20,000, will it be 20 or 40,000, and they'll get a monthly check for either let's see, that would either be about 250 or 250 or 500, about 250 or about $500 per per month, depending on the exact amount of the transaction. And so they'll receive that payment. And also each and every month the end buyer is paying down a lower percentage they're paying fewer dollars in principal down than we are paying down the bank. So each and every month there is an additional amount of what I call equity, basically a spread between their note and our note. And when that gets paid off, that portion, would also be split. That is also split between us as the GP and them as the LP. So in addition to that, cash on cash, at the point of exit, there's a bit of an equity kick on the back as well. These are they're structured as long-term investments. However, we understand that at times a limited partner might need to bring their funds out. So we do offer with typically it's a 90-day notice. We will buy your portion, buy you back out of the transaction, and the only cost to the person for getting out is the returns during that 90-day period are surrendered. But you can opportunity to get that get the liquidity back if you need it, but also it's there for the long term. You don't have to think about it's a check every month. You don't have to think about finding a new home for the money as it matures, or experiencing the pain of watching it be at a 3.5% in a CD. But there's also passive. It's done for you. And a piece that we can also bring to investors is thinking about diversification. If if someone wants to get into the buy and hold space, but only has one or two properties, you're at the highest risk point in your portfolio, because if one of those, say you have two properties and one of those two isn't working for you, not only do you have the headache of trying to get it working again, 50% of your portfolio is not writing you a check, and that can be obviously very painful. Whereas with us, if you were to say, instead of having two whole properties, you invest in 8 fractional properties, 8 quarters, to get to two properties. You have the diversification across properties, but that diversification is also can be geographic. You could buy portions of properties in multiple areas, another form of diversification. And at the end of the day, the properties are not managed by you, so you don't have it's not you as an investor trying to get get that property back to performing state, that's us. So those are, I think, some neat opportunities that we offer to people in that space from an investor perspective, and that's someone investing cash in relatively small and approachable chunks. A lot of these types of investments, you need to be an accredited investor and bring $50,000, $100,000, $200,000, and they're individual joint ventures on a particular property. So you can drive by the property that's there if you want, and also then you don't need to be an accredited investor. If you're reaching out to us and for to joint venture with us on a property. So those are some great things. Obviously, we don't publicly promote and advertise individual opportunities. What I talked about is obviously just kind of for a demonstration. So we work with investors with what do we who reach out to us, and we can work through those. A third opportunity is, we talked about, those are cash-based investments. The other is there's very frequently when you talk to people that are wholesalers, that their goal is to have some form of portfolio, but often they either don't have the current means, or they don't have the current bandwidth to get into another business that will, instead of bringing cash to a transaction, might bring a property to a transaction, and in lieu of, or as some sort of hybrid of an assignment fee, instead that wholesaler brings the property. We purchase the property, and it goes through all the same systems and processes that it normally would, and that wholesaler starts getting mailbox money just for bringing a property. They didn't no money out of pocket, they didn't have to find a seller, they didn't have to find the funding to close, they don't have to manage it or anything of that nature. Brought the property, and they get mailbox money.
That's pretty cool. There's a lot of different ways to get involved, it sounds like, from an investor standpoint. While we're on the topic, is there a good way to get in touch with you if someone was interested in doing something like that?
So, all of the the socials, Anton C. Hartmann, which you see below, YouTube, Instagram, but also Anton C. Hartmann at gmail.com comes directly to me. So any of those, Facebook, any of those, Anton C. Hartmann will get you to me.
Perfect. No, that sounds great. Is there anything that's holding you back from doing more deals?
We have the systems and processes to scale, and we've done more transactions in the fourth quarter of 2024 than we had in the previous months of the year. So we're already starting to see scale. But at the end of the day, having additional investor partners to work with is the biggest constraint, because the business model does require closing on properties, and the number of properties that we can be working on at any given time is a function of the dollars that are available. We have a network of some of our own funds and some private money that we work with today, but we're relatively close to the limit of the number of concurrent properties that are in the acquisition and disposition pipeline that we can. And so we have a lot more sellers and a lot more buyers than deals we can do, and that's driven by us just having to make choices based on available funding.
That makes sense. Do you think, you mentioned you have a day job. Do you think other people with day jobs could do something similar to this, or does it require, you think, a lot of the background knowledge that you have, and maybe they'd be better suited partnering?
I think that people can certainly get into the space with, but it's a lot of time, energy, and effort. I put in 50, 60 hours at a minimum of real estate time on top of the work that other full-time work that I also do. So yes, if you're in a position to want to put 100, 110 hours a week into it, you absolutely can. But I think that for most people, a partnership approach makes more sense. We work with partners to source properties. You also work with and get referrals for people that are looking for properties, especially a big way in which we work with people are especially those that have language skills that may have people in their circle. We have a large number of Hispanic business owners and Hispanic Spanish-speaking buyers. So we get that's another way that people can bring value. Really, if you can bring a buyer, if you can orient yourself around attracting and bringing buyers to us, that's a way you can partner with us. If you can secure either locked down deals, creative deals, or strong leads that you need a little bit of just final help closing, that's a way you can partner with us. And another way you can is by bringing money, but pardon me, that doesn't necessarily have to be your own money. Obviously, if you have a checkbook that or a CD or funds from somewhere that need a better home, you can certainly partner with us directly in that way. But it's a lot of you also leverage your connections in your community, your friends, your family, and other investors. If you can bring interested investors and interested money, also happy to partner with you and pay on that. So if you're interested in really any of the aspects of the business, we can find a way to bolt some partnership on with you, and so that's a way that you can leverage all the other things that we're doing. So you don't have a huge amount of time, or you have specific interests. There's a lot of pieces to this, and a lot of people that talking to people that want to sell properties all day long, want to sell properties, that speaks to them. Those are the types of relationships and people that they want to be talking to all day long. And the idea of going and talking to someone to raise capital or trying to find a homestead buyer just sounds terrible. Uh, and there's others that I want to sell a property. I want to
Mhm.
get homestead people into there. I like reaching out in my social circle. Maybe I'm a Hispanic business owner myself, and I have I go to contractors association meeting, a Hispanic business owners, Hispanic Chamber of Commerce, a barbecue on the weekend, and I would like to I talk to them about opportunities to buy property that you don't want to do any of the other pieces. So there's a myriad of ways to take advantage of the fact that we have the whole picture to do just the part that's of interest um, to you. Obviously, with all the people that we work with, being ethical and upfront and honest and transparent that's the bedrock of the business that we do. And we holding the partners that we work with accountable to that is important. I don't want to be a jerk in doing my business, which means I don't want to partner with someone who's going to be a jerk as a part of what they're doing with us. So doing business the right way is important. Doesn't mean we're a nonprofit organization. We're not by any stretch.
Mhm.
We do we're running a business. We're making money, but we want to do that the right way, and really want to partner with people that are interested in doing that.
Oh, that's wonderful. And I super appreciate you sharing your story because this is a really interesting way to get into real estate and to have, built your portfolio so far. And I think it's unique amongst probably what most people have heard, right? They get the one or two rentals, maybe they move to a multifamily, something like that. But even in the creative real estate space, this entire, empire that you're building is pretty exciting.
Yeah, no, I love it. I think that it's really exciting, and it's growing at a great clip. I'm hoping the plans call for trying to do at least another 50 transactions here in 2025. Um, and that's kind of what we're hoping is a low water mark. If we can drive an increase in the number of partners that we're working with, especially on the financing side, the sky is the limit. I mean, we have the systems, and I know I keep saying we have the systems and processes, but we spent a lot of time making sure that those would work at 550, 500. So that we would have the foundation that when we could plug additional resources in it, that it is scalable. Um, so I know systems and processes are one of the. I mean, there's probably not a less sexy piece of the business than systems and processes, um, but it all falls over without those in the end. So we built those, and um, that's allowing the growth, and that's really exciting because with each transaction we do, if you think about even just a basic transaction with one family on the seller side, one investor family, and one buyer family, the average family size in America is about 4 people. So that's
Mhm.
12 people that were benefited just from doing that one transaction. And that's that kind of impact while also, having a successful business really helps get me up. It gets, me, up in the morning, and gets me really excited about what we're doing, and what, we can allow, partners to work with us and do.
Yeah, it sounds like 2025 is set to be an excellent year for you and your business. And I
Yeah.
really, really appreciate you sharing your story with me. And thank you, everyone here, for listening in. And please find Anton at Anton C. Hartmann on Instagram, on YouTube, and antonchartmann@gmail.com if you want to reach out about some of those partnerships. Thanks so much, everyone.
Thank you very much for having me. I appreciate you taking the time, and I know you're doing some amazing things up in Utah. I think you have every form of rental imaginable. I think you're as creative with coming up with ways to rent properties as I am in the seller finance and wrap space. And I'd love to, maybe learn a little bit more about what are you doing? What's what is 2025 going to look like for you?
That is a good question, but I am really excited to continue. We've been doing wholesaling, and we're expanding onto that. So doing some more buy and holds, pivoting into co-living a bit. So super excited about that option. And then I am also starting to get into lending as well. And hopefully going to be able to partner with you on some opportunities, because I think that is very aligned with my 2025 strategy going forward. I think myself, my network have a lot of capacity for and interest in passive income and some of the mailbox type money that you were mentioning. And so those two things I think are my main focuses for 2025, both the co-living space and then on the lending space as well.
That's awesome. I mean, I think that looking forward, obviously, to some opportunities to work together, but I think really fundamentally we're both hitting affordable living, because what I'd say is the most affordable house in America today is the house that someone bought 20 years ago and they're still living in. So getting someone into a home now is a long-term piece of affordable housing. But
Right.
there's also a lot of other pieces to the affordable housing space. And I think one of the barriers that people find to being able to ultimately buy a home is that earlier on in their adult life, they don't have an affordable place to live. And that's where the co-living that you're working on is, I think, a huge piece of solving affordability up front. So it's incredible to see what you're doing there. So I think it's a whole spectrum of attacking affordability.
Yeah, and I like the multi-pronged approach, right? Because not everybody wants to buy a house. And I love that you're helping the people that, you know, don't traditionally qualify but are really able to buy a house to do so. But for the people that aren't a good fit, I think, co-living is a good strategy. Maybe they're not somewhere where they feel like they're going to be permanent. Maybe they're filling out the area, but they're single and they're trying to figure it out. Maybe they know they'll only be there for a limited amount of time. Anything like that is a good reason for opting for co-living. And so I do like that we're kind of hitting it for both ends.
Yeah, I think it's that the nature of affordable housing problems is different, as you point out, at different seasons in someone's life. At a house, a house is not necessarily a great solution for someone in their, say, mid-20s that's trying to feel themselves out in an area. By the same token, a co-living, and they're an excellent candidate for co-living. On the same hand, a family of five is not a good fit for co-living. But solving those needs at different points in their lives is what allows people to, move forward and allows people to have an affordable place to live, regardless of, kind of where they are on their life journey.
Absolutely. Absolutely. Well, I appreciate your time and thanks so much for joining here today. And with that, I will stop the recording, but I appreciate it.
All right. Thanks.